head on over to DeFi Llama, open her up on the left-hand side, go all the way down to the bottom, and click on the correlation matrix and play with it. Understanding asset correlation, so coin and token correlation, is really going to help you especially as a liquidity provider. Because if we are in bullish times and things are looking green and things are looking hot and things are looking good and money is being made and liquidity is entering the markets, you want to be in correlated pairs. And all it fundamentally means is correlated pairs move together. They move up together and they also move down together. And instead of being in let's just use an example, ETH and USDC pool, if ETH starts going up in value, you're obviously sold out of ETH and into stablecoin, into USDC, which nothing fundamentally wrong with it because you're really laddering out. But if you want to maximize the opportunity in the bull run and you want to be earning fees and being a liquidity provider and having a DeFi business, you may want to consider correlated pairs. If you go onto the correlation matrix and you play with it, you can enter in a bunch of assets and you can see how correlated they are over a month, 3 months, and 1 year. And you can make decisions on what pairs you want to potentially yield farm, provide liquidity for. And you'll know that because they're tightly correlated, the closer to 1, the more green that chart looks, the more correlated they are. And the closer to -1, the less correlated they are. And you want to be in highly correlated pairs if you're yield farming them in a bull market, because as the price of those assets increases, you stay in range and your portfolio, like if those assets go up 1 for 1, so let's just say, I'm just using some bad examples here, but if ETH is $1,000 and I don't know, SOL is $1, if ETH goes up to $2,000 and SOL goes up to $2, meaning the price is double, so they go up by 100%, you're going to be perfectly in range, your portfolio would be perfectly double, and you'd be earning fees the whole time. Now that's obviously not a real life example, that's spreadsheet math. In the real world, that differs. Assets don't move together perfectly, but there's a really awesome ETH and BTC pool that a lot of our members and clients are in. It's printing between 30 to 50%, which is a lot in traditional markets. It's so-so in DeFi. But BTC and ETH are fairly correlated, so as the price of these assets has been moving up over the last couple months, not only have we been earning fees, our portfolios are also up as much as BTC and ETH is up, and they've been actually pretty tightly correlated. So have a peek at that. We have a lot of content on correlated pairs and strategies inside the UIG. We also have some stuff around on YouTube. They're typically like the least watched videos. YouTube doesn't push them too hard because I think it's not as exciting for people. But we're still really big on the education of this and making sure people have a strategy and they're educated. So do check them out. And if you have any follow-up questions or if you're looking for some more content, just make sure you hop into the UIG, ask us about it. We can send you all the content, write-ups, reviews, walkthroughs we have on correlation. And it's a conversation we've been in a lot because, again, the markets have been bullish. And so we're leveraging and using correlated pairs so we can get the best of both worlds, meaning fees and price appreciation. So do check them out. If you're enjoying this podcast, jump onto YouTube and leave a review. If you're not part of the YouTube channel, it's at CryptoLabs Research. I'm Rubixinator on Instagram. If you want to connect with me in the DMs, let me know you found me through the podcast, the audio experience. And with that said, I'll see you in the UIG. Peace.